My name's Wilton, and I'm going to be your host for today's webinar. See if I can get some things straightened out here. Uh, Sorry it's a little bit late, but we will get started here very quickly. First of all, a couple things. If you can hear me, please put a little message in the chat window. And if you have any questions, you can put messages in the chat window, and then I'll respond to them there. Maybe you can introduce yourself and say hello as well. Tell me, all right, great. Okay, so let's go ahead and get started. I'm going to share my screen with you, and you will see my stock screener, my web browser here, the Fintel Workbench. Okay, you should see the Fintel Workbench on your screen there. Let me know if you can see that. And then if you can, we will go ahead and get started. Okay, so let's see. Maybe if you guys want, you can go ahead and put some topics in there that you would like to hear about. And I will go ahead and get started with some kind of the basic stuff that I normally talk about. First of all, if you're on this screen, this is the workbench. This is how I got here. When you log in normally, you're going to end up at your dashboard, probably something like this. And if you come over here to the screens and you click on the workbench, okay, this is our screener. And we call it the workbench because it does a little bit more than screening, but we do some ranking and some other things as well. So it's kind of more like it's a workbench. That's why we call it a workbench. But it's a stock screener first of all, and then it does some other stuff. So let's take a look at what we can do here. First of all, if you don't know what a stock screener is, I'll go ahead and tell you what a stock screener is. A stock screener is basically a query tool that allows you to filter all of the companies on that are investable into a smaller set of companies based on some criteria. So it's basically a way to whittle down. Let's see, there's like 75,000 companies in the world. You don't want to look at all of them. So you want to kind of filter out the ones that you're not interested in. You might have some theories about when companies do well and when companies don't do well. And those theories might be based on financial metrics like the cash flow or the valuation scores or things like that. And so for the stock screener, you can basically build a filter and then basically reduce the large number of companies down to just a small set, and then you can look at those specifically and kind of finish your due diligence. That's kind of what a stock screener is. Most stock screeners are point and click type screeners, and those are very, very useful. And Fintel is not a point and click stock screener. It's got a query language. It's got a kind of like SQL. If you're a programmer, it's got a query language, and it's got an editor. And so it's a little bit more complicated. It's a lot more complicated, but it's a lot more powerful. And I'm going to show you this here in a few minutes. So here, let's get started here with some examples. This quick start guide right here is the top of the workbench. You can hide this, okay, and open it back up if you like. So I'm going to hide that, and I'm going to get started with just a few simple things. Price is greater than 1. Okay. The way this works is that each line here is ended by semicolon, and you have an expression here that evaluates to true or false. So what this is going to do is it's going to return to me all of the companies where the current share price, or at least the share price at the close of business last night, was greater than 1. And it's US only right now because that's the default. So if I click on cancel here, I don't want to go through all of these. You'll see here over to the right, these are all greater than 1. Okay, I could say share price is less than 1, and if we confirm this, I think you'll see that the share price is less than 1 for all of these. A lot of OTC stocks here. Okay, makes sense so far? I hope so. There's a couple people on here I haven't heard from yet. Maybe you can jump in there and tell me if you're very experienced, if you're not experienced. If I need to go really slow, that would be helpful. Because I'm going to try to clip through here to make sure that people can kind of get all the topics they want. So if I'm in the United States, and I might say something like country equals US. By default, we say US, okay? but a lot of people don't want to get OTC exchanges, so you could say does not equal OTC. Okay, this does not equal. That's what this means. And I can say price is greater than 1. So for example, this should return me all the companies that should not have any OTC stocks. Now, if I said price is less than 1, it would be interesting because you can't have a price less than 1 and still be listed on the NASDAQ or the New York Stock Exchange. So this should return companies that are in danger of delisting because, again, you can't have your price less than $1 and still be listed on the NASDAQ for a very long period of time. Okay, cool. Question so far. So how is this interesting? It's not really all that interesting in the grand scheme of things to just do this. This does not get you anything beyond what a point and click stock screener could do. What gets interesting is when you want to start saying things like, find me companies where, well, where, for example, the assets, I'm going to hit control space here to do autocomplete, the assets current minus the liabilities um, is greater than market cap. So I do this example in every webinar. If you are a fan or a student of Benjamin Graham, there is not a flag for companies at risk of delisting. That's the question somebody just asked in the chat. There's not a flag for companies at risk of delisting, although it's it's possibly a good idea. It is a good idea, but we don't have it. So if you're a fan of Benjamin Graham, you might have come across this formula before. And what this is that basically Benjamin Graham and Warren Buffett both hypothesized that if you went out and you found a company where the current assets and you subtracted the liabilities, and that was greater than the market cap, and what that means is you could actually go out and buy the company at the current market cap, pay off all the liabilities, and still have assets left that you could liquidate and make a profit. This is basically a liquidation value type of business, and you're not going to find any point and click stock screener that allows you to build an equation like this. And this is the kind of the core idea behind this, is that you can if I click on get results here, you can see here that these are all the companies where the liquidation value is actually there. Okay, so interesting. You can also do things like build a margin of error, which is what they also suggested. You might turn out that not all your assets, which includes inventory, are good and saleable at full price. You might only get pennies on the dollar for some things, so you might want to have a little margin of error. And so what do you get here? So now you get a smaller number of companies. What if you said, what if your appetite for companies is more than just the United States? Well, you can do this. You can say in the United States, Canada, Great Britain, we use GB instead of the UK, Germany, France, Australia, Japan, that kind of thing. All right. And you can click on get results. We cover, I think, pretty much every major market. The financial data that's backing this, in case you're interested, is Capital IQ financial data. So this really clean, really good data here in terms of the overall accounting data that we get. We get balance sheet, cash flow statement, and income statement from Capital IQ. Now, one of the things you need to understand here is that obviously the market cap is going to be in different denominations if you're in different countries. So this market cap is probably going to be in euros since it's traded on the Dusseldorf exchange. This market cap is going to be in Canadian dollars, and these assets current and liabilities are going to be in euros because I think that's what they're reported. So questions about that so far? This should all be review for at least the people who I can see on the chat who are not new. So let's unhide some things here. So we've just talked about the examples. We talked about the countries. We've talked about Boolean operators. In that sense, what this means is you could say price is greater than 1 and price is less than 10. Okay. This this expression here is equivalent to this expression here. Every single one of these expressions must result in an and in order for the company to pass through the filter. Okay, so keep that in mind. Um, um, filter the predefined screens. Yeah, I've been looking at that. I've been thinking about putting filters on the the predefined screens. Hi from Ontario, Canada. Nice to see you here. If you have any questions, let me know. Glad you're here. We have great coverage of Canadian companies, as you can see here. So let me just do a quick um, quick query on Canadian countries. Okay, Canadian companies. Uh, let's get rid of this guy. I can put semicolon. I can put slash slash, which means this is a comment. It means that this expression won't evaluate, or I can say something like this as well. If you're an engineer or a programmer, this should all be pretty familiar to you. You can do this also as a comment. Okay, so let's keep going. By the way, this expression here, we don't have a way to filter asset classes, but this expression right here will by definition filter out any ETFs. So if you said current assets is greater than 0, which seems like it would be obvious, since ETFs don't have assets to speak of, it will by default filter out the ETFs. It's kind of the quick kind of a workaround to solve the problem that we don't have a way to put what is it country, we don't have a way to filter on asset classes. Assets is greater than 0. Okay, so okay, great. So there's this. So let's keep going here. So we've got some Boolean operators. We did the numbers. We could do market cap. It's greater than 100 million. I can do a billion, so forth. That's what this means. I can do an ordering. So I could say CROIC is greater than 5%. Order by cash return on invested capital. So, oh yes, I've got a bit of some kind of cold. Thank you for mentioning that. So here's the order by. We've got I can select by CRIC greater than 5%. And if I say order by CRIC, what this means is that this is going to be an ascending order right now. If I say descending, this will tell us something a little bit different. And by the way, since I'm sorting, it's going to hold all of the results and then return them to me at once after the fact. So this is some pretty crazy cash return on invested capitals. I would want to do some more investigating on these and see why these are so large. But you can see here that's sorted from high to low. Okay, and then we can also limit results. I could say limit if I want the 100 best is less than. Let's get any wild ones out of there. Okay, and let's take a look at what we have. Okay, so here we go. So this has got some really good, juicy cash return on invested capital companies to look at. I could say things like PE ratio, or PE ratio is less than 25. I could say EBIT to enterprise value is less than. This is basically a yield type result, greater than 0.02. So 0.02. So question so far? The question. So somebody asked about the short interest page. This is basically the stock screening webinar. So I don't usually spend a lot of time going out and looking at the short interest page or the other pages. However, we can talk about short interest data here, and I think maybe that will help you understand some of the stuff. So let's just do that real quick, okay? Because we can work that in here. I'm going to click here on screener terms, okay, and shorts. If I click on and I do a search down here, I can start to see all the short stuff here. So here's short squeeze, uh, short. This is all the kind of terms that we have that have a prefix of short, and um, what this means is that you can screen on all of these. So if I wanted to say, find me companies where the short interest percent float is greater than, let's try this again. It's greater than 25%. Try this. Okay. No, since it says percent, it's actually going to be a greater than zero number. So if it doesn't say percent, if it's like a ratio, then you have to put a 0.25 in there. So now we're going to see all the companies where the short interest percent float is greater than 25%. So there's a lot of companies in here. Okay. What else do we have? We have the borrow rate. So the borrow rate is basically what it costs to borrow shares. If I want to say, find me all the companies where the borrow rate is above 75%. The borrow rate, if you have a company that's expensive to borrow, the shares are expensive to borrow, then it can be hard. It can be a potential short squeeze candidate. Let's dial this back maybe a little bit. Say 10, 15%, and 50. Okay, so you can kind of see how we're doing this now. What else do we have? We have Hong Kong. We have short interest change, short interest percent float, short interest ratio. The short interest ratio is basically basically days to cover. It's the short interest divided by the average volume, and so this is helpful for determining. It used to be a really good indicator of short squeeze, but I don't really buy it anymore, because if you go back and look at GameStop short squeeze, the days to cover was actually very low because there was so much volume. The short interest was very high, which so was the trading volume. So the short interest actually went down. The days to cover actually went way down, right in the middle of the short squeeze. So I don't really consider this to be a strong indicator. You can see the short interest ratio here. This is this is companies where they're so thinly traded, we can't really give you a good number for this. Okay, keep going. Then we have this short squeeze score, which is our best estimates on the most likely companies that are going to squeeze, if any are going to squeeze. You can do this. Okay. And this score is basically a score from 0 to 100, and it looks at the borrow rates, it looks at the short interest percent float, and other things to figure out who's likely to squeeze. Order by 25. Okay, let's see if this works. I know that we had some issues with, yeah, so this needs to be fixed. Oh, order by. We're still finding bugs, trying to get rid of them, trying to get rid of them as fast as we can, but it takes a while. So here you can see the short squeeze scores in descending order, the top 25. Okay, this is basically the same way that we create this leaderboard. If you guys have seen this leaderboard, everything that's in the leaderboard, you can use in the screener. Okay. Okay, let's keep going here. So the rank. So we can also do timestamps. So you can do something like this. If you want to find a company where the price today is greater than the price yesterday, you can put a timestamp marker on here. So this is a relative timestamp. That means 1 day ago. So this will tell you all the companies where the current price is greater than the closing price from a day ago. And then you can really stack these into some interesting things. I'm not quite sure why this is not working. This should be working. For example, you could say cash, you could say like this, revenue A, that's and revenue without if you look at this, we've got revenue A and revenue Q. Revenue A is the revenue that was reported, the annual revenue that was reported on the last 10Q or the 10K. Revenue Q is the quarterly revenue, and revenue by itself is the revenue for the trailing 12 months. So we always want trailing 12 months revenue because it's going to be current. If I could say, let's find the companies where the revenue has gone up in the last year. So I can do this. Okay. So find me all the companies where the TTM revenue is greater than the revenue for the last year. And you can do things like stack up growth factors here, where you can say things like the current revenue minus the revenue from a year ago divided by the revenue from a year ago. Okay, is greater than 25%. This is how you get a 25% growth rate. So you see, this becomes really powerful here. You have basically infinite possibilities on how you can stack these together and find companies that have meet your financial criteria. Okay, there's technical indicators here. So let's get rid of this. Technical indicators are all right here, and we're trying to add more, but basically, you know, the technical functions, these are functions. You basically do this, get results. People who do EMA or do trend analysis, you could say exponential moving average is greater than the current EMA. This should say the 20-day EMA is greater than the 50-day EMA. Is that right? 50-day. This is how you can see if you're getting a crossover, right? Is this stuff making sense to everybody so far? We did timestamps here. We do functions, technical analysis. What else? Anybody else have some questions about this? Okay. Can you specify ETFs? You can specify ETFs. Yeah, there's ETFs. I mean, we'll get you ETFs. We cover ETFs, so they should show up here automatically unless there's some data that we don't have. So, for example, if you said short interest percent float, we don't have float for ETFs. Okay, so that's gonna eliminate all the ETFs. Okay, but if you said just short interest is greater than 50 million, let's just see what this says. I'll bet you there's going to be some some ETFs that show up in here because you can short ETFs. So it kind of depends on, kind of depends on what terms you use. By default, ETFs are included in the universe of companies that you'll start from, and then if there's no data available for them, then they'll be eliminated. So I saw an ETF come by here. Here you go. So yeah, okay. So here's an ETF and here's an ETF. Okay. So if you said short interest greater than short interest 1 month, this will give you all the companies where the short interest has gone up in the last month. Okay. And then if you wanted to do something like, oh, this is wrong. This should be like this. If you wanted to do something where you wanted to find it was like more than an increase, the standard equation for a change, an increase in something is to do this. Okay, it's greater than. So this is going to give you all the companies where the short interest is increased by 25%, right? Okay, and you can see here there should be ETFs in here as well. So did I answer your question about the ETFs? We got warrants, we got units, we got ETFs. Um, so the growth opportunities ETF has the short interest went up significantly. That's because people believe that we're moving into a risk off uh, 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 mode. And so you can see how people are going to think that the growth opportunities, growth companies are going to be declining a lot. So this seems like a pretty, a pretty reasonable bet if we think that we're going to go towards value factors being the leading factor, the winning factor, and growth is going to decline. Then it would be an interesting bet to bet on against growth opportunities. Um, okay, anything else? Any other questions here? Um, here's another growth ETF that's getting shorted. Um, okay, and then let's talk about factor investing. So we do this thing called ranking, and a lot of these companies are rankable. A lot of these terms are rankable. So what does that mean? Well, I'll use CROC as an example. CROIC, um, cash return on invested capital is a really great uh, 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 measure of cash generating efficiency. I actually like to use operating cash as return on invested capital because sometimes you could sell a building and generate a lot of cash, but that's not really based on, unless you're a real estate company, that's not really operating cash, right? So I like to look at operating cash return on invested capital. This is something that we kind of made up here at Fintel. But what are the companies that are most if I don't, it could be that maybe you have you don't want to necessarily adjust your number every time. You want to just take the most efficient ones. So you could say the rank percentile OCROIC is going to be the top 25%. Okay, let's see what this says. Let's say get results. So what this does is it's going to show you 25%. That's not right. Rank percentile is above 75. That will get you the top 25%. Okay. So rank percentile goes from 0 to 100, 100 being the highest numbers. And so whenever you do this, you need to make sure that the rankings that you're doing are good, the higher the number is. So PE ratio is a terrible version of this because you don't want high PE ratios, you want low PE ratios. So you can't rank, you don't want to do a rank percentile greater than 75 on PE ratio because it will get you the most overvalued companies. So let's see where we're at here. So we could even trim this down to do 90. Now, when you look at like academic studies on valuation and things like that, what you'll find, and this is in the book. Here, let me see if I can find this book. I brought it here. There's a book called Quantitative Value. Okay, this is the book. It's a good book, right? So what they do is they do a study and they say, let's determine what valuation metrics are the ones that are most predictive of future earnings. And the way they do that is they say, let's take all the companies in the investing universe and order them by enterprise value over EBITDA or EBIT, okay, or EBIT to enterprise value. And they say, take the bottom quartile, the bottom quintile, the bottom 20%, the middle 20%, and so forth. And then they look at the performance of each of those portfolios. And what they find is that the company that have the lowest EBIT to enterprise value tend to outperform the market over time, right? So that's kind of how you can prove that valuation works. Well, what they're doing is they're saying, let's take the ones that have the lowest, the best in the entire market, the quintile that has the best numbers. So you can do the same thing here, right? You don't have to necessarily pick a number for this to be better than. You can just say, find me the companies where the rank percentile is in the top 90%. It's going to give you the ones with the highest number. Okay, so that's pretty cool, right? You can't do that with a point and click stock screener. But what if you're not certain about EBIT to enterprise value, and you're also interested in like book to market, book value book to market. Okay. And by the way, if you just stick a number in here, like EBIT to EV, it'll just put that into your report. You can see here, this shows you the rank, but it doesn't actually show you the value. So if I put these numbers here with no expression, and I say get results, it's going to give me, it's going to show me the numbers here. It's not going to filter on them, but it's going to provide them to me. So it becomes like a reporting tool. But if I wanted to say, I want to blend my two value factors to create a new factor, then you could do this. You could say, let my value factor equals the rank percentile of EBIT to EV plus the rank percentile of book to market divided by 2. So I'm taking the average of these two, okay? Right? And then I want to say, filter out all the companies where the my value factor is less than 75%, okay? So this is going to say the percentile of these companies, the top 75, it's going to average this, and it's going to filter out any that aren't in the top 75%. This is how you can create a blended factor for yourself, okay? What did I do here wrong? Oh, I forgot this parentheses here. Okay. So here's your value factor. It's going to take a while to churn through here. And this is basically, and just so you understand, this is basically how, factor funds or smart beta funds work, or professional investors that have a lot of money, are doing their analysis, right? They're taking these factors and they're trying to identify companies. They're taking the top X or the top Y, and they're making these kind of quantitative bets based on this kind of thing. This is the same thing that the magic formula did. It said take cash return on invested capital, take this other value, combine them together, and take the top 25 of those. So I'm not sure what happened here. It didn't give us any results. I'm not sure I like that, but let's try this again. Let's see what we have here. So I'm not sure why this isn't giving me the results that I wanted to, but if you go take a look at the screens up here, and you go down here to quality of undervalued EBIT over V plus V and blend, and you open this link, you can see this exact same example here. I've tried to provide some more interesting examples. This should be kind of what we're just talking about right here, where I've got the country in here. Can you guys see this? Let me zoom this up a bit. I've got the countries in here. I've got the rank percentile. I do some eliminating up front, and then I create a new factor here, and basically this creates a list of companies that do this same thing. Okay, so I hope this is helpful. I'm not sure why it's not working right here. And then if you wanted to add a value or a quality factor, you could say this. You could say you could add a quality factor in here plus rank percentile OCRIC divided by 3 to get the average. Okay, my quality and value factor. Okay. Okay. How's this looking? Is this making sense? This is how I like to do it. If you take a look at these so let's take a look at these stock trading terms. If you take a look at these, I'm going to do a search here for score. You're going to find here that you've got a short score, which is the opposite of the short squeeze score. There's a short squeeze score. There's a quality score. There's a quality score is basically a scoring model that I developed that looks at the quality of the company and provides you a number from 0 to 100. You've got QVM, which is quality, value, and momentum. So it combines quality, the value, and momentum scores to provide this. So like I'm trying to do a lot of this work for you. But if you don't like the scoring models that we developed here, then you can create your own quite easily. This is exactly what what these scores do. Thank you. Um, and if you go, like I said, if you go dig around here and you go look for more scores, there's a Piotrowski score, there's ownership score. So this tells you a scoring model from 0 to 100. It talks about uh, uh, fund accumulation of a company, and it ranks all the companies in the world. So there's a momentum score as well. So there's a bunch of stuff that you can do. Insider accumulation score talks about insider accumulation. Um, if you have an idea for a score that you want, let me know and I'll create it for you guys so we can share it with everybody else. But ultimately, you can take a score, anything in here that says rankable, you can put into a rank percentile, and it will generate for you a number from 0 to 99, and then you can basically sort and slice and dice on that. So um, I don't know if I have anything else to say about this. This is basically the core of it right here. Most of the other stuff are kind of beginner stuff. This is pretty advanced, but ultimately, the reason we did the the query language, we took the query language route over a point and click screener, is because we wanted to be able to do this. And as far as I know, there's no other tool available to individual investors that allows you to do this. So that's why we did it. Okay, I'm kind of worn out here. Any questions? I don't really have anything else to say. If you don't hear any more questions, then I will let you guys go. I know there's a question about outstanding that came in the tickets that said um, save screens aren't getting updated properly, and I am looking into that. I have created a screen, and I'm kind of looking into this. Uh, it's been running for me. At least it ran once for me, and I'm kind of trying to monitor this issue that somebody reported about um, trend lines not working. So looking into that, I haven't forgotten these tickets. Um, use T in the screen. Yeah, so I'm looking at that, trying to recreate it myself. So okay, if you don't have any other questions, I'm gonna let you guys go. I appreciate you joining me today. I always like to see people that are interested in the site in the company. I'd like to hear your questions, and I always like to hear your ideas as well. So if you have any ideas about how this can be improved or how we can do more with this, please let me know. Try to create some, and then we'll do our best to accommodate what you would suggest. Okay. So thanks again. Stop sharing the screen. Thanks again, and I appreciate you guys. This is going to go on YouTube probably within a day or two. Just go to YouTube and do a search for Fintel webinars, and you'll see all the past webinars that we've done, and you'll be able to stay up to date on all the new ones too. So thanks so much.